apps as well as revenue.
What makes Bitpanda different from other exchanges that are competing in this arena?
So we had a very, very different strategy at the beginning, and we still have. So we are going the full regulated route. We're doing all the headache stuff, trying not to avoid regulation, instead of going in we talk to every regulator in advance, look for all the license part. We have hired great people from regulators over the years. And this was our strategy from the beginning. So we grew much slower at the beginning than other companies in the industry. But now that strategy really paid off, as everywhere across the world, things are getting more, let's say, in a serious manner in the traditional finance world and more regulated.
Eric, welcome back. Let's talk a little bit about your international expansion plans. What markets are you looking at? Where are some of the priorities? Are you looking towards the US? Where do you see the biggest growth coming from?
It's honestly not that international yet. So it is a huge focus still on Europe. And that's going to stay like this for a while, because Europe is super hard to conquer. It is not one place you go in. I said it very often. This is why many US companies have a hard time going into Europe. It's not going to Europe. It's going into 20 different, completely different countries in Europe. And therefore it's a lot of effort. So this is our USP, and this is what we continue to do. And it's a lot of work, and there's so much more potential, because in Europe is very different to the US. People are not much investing in general here. So there is the huge potential.
That's interesting that you say that, because recently there's been so much controversy in the US. I don't know if you've been following all the debate about the infrastructure bill. And I think a lot of people in the crypto world think that the US is a really hard market. Actually, similarly to what you say, Europe has all these different countries, but the US has all these different states, right, with completely different rules. I mean, do you think that Europe is actually a harder market to break into than the US?
For a European company going into the US, it's much harder going into the US, I think. But on the other side, it's the same on the, like when you're coming from the US going into Europe, because you really have to talk to 20 different or more regulators here. And that is really a nightmare, I can tell you. And everybody interprets it differently. It's not just one license that covers everything. So I think both markets, for each player on each side of the world, is very hard to get in. So this is why we're focusing purely on Europe so far.
Just one quick Europe follow-up. Is Europe mostly retail, or are there big institutional investors in Europe as well?
Europe is always lagging behind a bit, and not just on the let's say investing front, but also in general on the tech front. So you always see developments first in the US, and then a few years later, something is similarly happening here in Europe as well. So currently, it is a huge retail market, and I'm very certain that quite soon the infrastructure and the whole license setup and everything will be ready, that institutionals and more professionals enter the market from Europe as well.
Hi, Eric. How are you offering free stock trades? Is it through pay for order flow?
No. We are doing it spread based, like everything we have. But it's a very small margin here. What we do, for example, to be very transparent, let's say you buy 100 euro of Apple. You would pay right now around a spread of 10 cents. So it's very cheap. And we're doing this so everybody can invest, even if you just want to invest 5 euros, and take pretty much the advantage we saw from crypto and bring it to all traditional asset classes. So it's actually opening up the whole financial market to everybody. This is how we do it.
So
And then it's a little spread on every transaction.
Okay. So some of your competitors, of course, are in fact doing pay for order flow. What do you make of people in the U.S. Congress, for instance, who are trying to ban it? Do you think that's something that could happen, that should happen, and do you see it spreading to other countries?
Yeah, it's not the healthiest way, I would say, to do it. And also here, again, that really emphasizes what I just said. Some regulators in Europe say, you cannot do this. You need to guarantee best execution. And some regulators say like, yeah, it's fine. It's like a gray zone. So there isn't a clear answer. But I think the bigger and bigger the market gets and more retail customers go into investing in general, you will probably see more protection and therefore see more enforcing of best execution. It's my opinion. But I don't know.
When you see FTX and Binance rolling back products like leveraging as well as tokenized stocks, what do you feel? What is your perspective on that in terms of the regulators and this perceived crackdown on some exchanges throughout the world?
That is literally what I meant at the beginning. With we were moving slower at the beginning, but now it really pays off. So to do this fractional stock thing, it took us 2 years to get the license for this, the MiFID II license here in Europe. That's kind of the investment firm license. And really, because it's very new, so you had the regulator had to understand it and find similarities to other things and then build something new together with us. And that was a long journey, and therefore it's not a big surprise that these things happen because the classic financial market stocks is completely different, still differently regulated than the crypto market, and therefore it's much more regulatory work in this area to be innovative than on the crypto market.
So Eric, speaking of your competitors, we're seeing a lot of questions regarding stablecoins and their role in some of the larger centralized exchanges. Do you have any thoughts on that? Do you think that there should be more regulation from the likes of the US SEC or the Treasury Department or any other regulators in Europe, for instance? Do you think that stablecoins are under-regulated?
I don't think stablecoins are a huge threat or a big problem in general. Probably like banks in general, they see it as, or central banks see it as a threat. Of course, they want the control for it. Therefore, I think if you have proper regulation that is not killing any innovation, is actually a good thing. And that helps to move big players and institutional players into the system, into the new market, and adopt it. That is very important. So that gives, the legitimacy? I hope that's the right word. And that is super important, but it's a very fine line to kill innovation and actually help establishing it. But for stablecoins, it could actually make sense if it's done in the right manner, where I'm very, very skeptical because there are different interests on the side of the central banks.
All right. Well, Eric, we've got to wrap it there, but congratulations on your raise. You're the size of 4 unicorns, so looking forward to seeing how you guys develop and grow internationally.
Yep. Next time I'm making 4 horns or more probably, so and then...
That was Bitpanda CEO Eric Demuth coming up, checking in on Asia and a crypto markets update with crypto trading and investing firm Crosstower. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Justin Solomon of Forecast News.
Welcome to the daily forecast, August 17th, 2021. I'm Justin Solomon of Forecast News, filling in for Editor-in-Chief Angie Lau, covering all things blockchain. Coming up, India's finance minister says the country's long-delayed crypto bill is now at the cabinet approval stage. Microsoft unveils Argus anti-piracy plans, and the Poly network hack saga rumbles on. Now let's get you up to speed from Asia to the world. First up, an update on the slow progress of India's cryptocurrency bill. It seems like things are picking up speed. The country's finance minister now says the cabinet note on the bill is ready and she's waiting for it to be cleared. An interministerial panel has already submitted its report to the government. It recommends a ban on all private cryptocurrencies. So what does this mean for a possible crypto ban for the second most populated country in the world? Forecast News' Monica Ghosh has the latest from Pune, India.
The Interministerial Committee's recommendations echo those made in a prior report submitted back in 2019. It recommended a blanket ban on crypto and penalties including jail time for violations. The Reserve Bank of India has also repeatedly called for a ban and said it has no difference of opinion with the Finance Ministry. That's despite Finance Minister Nirmala Sitharaman's earlier assurances that India would not be shutting all options on crypto. While the full details of the bill are still uncertain, crypto exchange UnoCoin told Forecast News a ban would be a very short-sighted move.
This is definitely will be a very strong death blow, I think, for the entire industry. Just because it can be used by the bad actors does not mean it has to be curtailed.
Satvik says the government could have a fight on its hands if it goes ahead, as there are now bigger players in the industry and much more data is available on genuine use cases for cryptocurrencies. If cleared by the cabinet before November, the bill could be introduced in Parliament in the winter session. For Forecast News, I'm Monica Ghosh.
Meanwhile, tech giant Microsoft has unveiled a new plan to combat piracy. A new white paper reveals the company has enlisted the help of researchers from Chinese tech giant Alibaba and Carnegie Mellon University. It's named Argus, and it will use the transparency of the Ethereum blockchain to provide an incentive-based system to fight piracy. But what can it really do? Forecast News' Lachlan Keller has more.
In Greek mythology, Argus was a giant with 1,000 eyes who always kept watch even while sleeping. The parents of Project Argus hopes it to be exactly that, striking a balance between privacy and transparency. Microsoft says running Argus on a public blockchain will allow for informer anonymity, and that its proof of leakage mechanism will allow pirated content to be traced to its original source using a watermark algorithm. The company also says it has optimized cryptographic operations to minimize the cost of reporting piracy issues. Alibaba has had its fair share of problems with piracy. Its Taobao site has been named and shamed in the past for selling pirated materials from books to movies. But that has changed of late, and it is now heavily involved in the Chinese central bank's ECNY digital currency project, with Project Argus is another step to restoring a tarnished reputation from the past. For Forecast News, I'm Lachlan Keller.
And finally, today, the Poly Network hacking saga rumbles on. The hacker dubbed Mr. White Hat may not quite be the white hat or ethical hacker Poly Network thought they were. Why? Well, that's because they've yet to provide the key for the multi-signature wallet needed to complete the full return of the stolen assets. In messages posted on Ethereum and shared on Twitter by crypto tracking firm Elliptic's co-founder Tom Robinson, the hacker said they will provide the key when everyone is ready, and that trust issues between the two parties are behind the delay. Meanwhile, Poly Network, which had previously offered the hacker a bounty of $500,000 as a reward for returning all the assets safely, has now announced a separate bounty program. That program has been launched in partnership with the bug bounty platform Immunify. It offers security agencies $100,000 each for valid bug reports submitted, with a total bounty pool of $500,000. Poly Network also tweeted they are set to relaunch their system soon following completion of their steps on their roadmap to recovery. Not quite the fairy tale or white hat ending many may have hoped for, at least not yet, but that's probably for another news day. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Justin Solomon. Until next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Time for our live look at Bitcoin. The CoinDesk Bitcoin price XVX index currently trading at $46,515. A bit of a pullback in 1.5% over the past 24 hours. And the CoinDesk Ether price ETX index is at 3240. ETH also declining about 1.2%. And the new DFX CoinDesk's DeFi index is trading at 737. DeFi is declining about 2% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. All right, and joining us now to discuss the crypto markets is Martin Gaspar, research analyst at crypto trading and investing firm Crosstower. Welcome, Martin. So here's what I want to hit you up with. We're seeing the 6th consecutive week of outflows out of crypto funds as of last week. It's the longest streak of outflows since January of 2018, according to a CoinShares report. We're seeing low volumes, yet the crypto markets are up, growing over $2 trillion in market cap again. Why is this happening?
Seems to be that, institutions are taking a step back from some of these products, as the CoinShares reports have indicated. But really, it's retail that's putting its foot on the gas and going back and accumulating Bitcoin, ETH, and other crypto. What I'm seeing on the on-chain data, it's really indicating addresses with smaller balances of Bitcoin. They continue to accumulate. So I really think we have this divergence where, some institutions may still be on the wait and see kind of path. Maybe they believe this rally is just a fake out. While retail has been, consistently buying, throughout the spring lull and June and July. So I think that kind of explains this divergence right now.
So, Martin, speaking of that fake out, do you think that might have been, I don't want to say by design, but given that we do have this lowering of institutional interest, yet there were a few players who may have made a few big trades almost to spur that retail interest. Is that something you think happened here? Do you think that maybe this is really a FOMO rally on the part of retail, while institutions kind of maybe will end up selling into it?
I actually don't think so. I think it's just continued broader adoption of crypto. I think more and more investors, individual investors, are coming into the market. Just because there's broader information about it, and it's something they really believe in. We see that some forward-thinking, companies are also continuing to step into crypto. Like Walmart and Amazon, putting up job postings for digital currency or blockchain positions. So I think it's really just, those that are really interested in this space are continuing to march on. And to me, it seems right now that we're could be the calm before the storm in a bullish way. We continue to see, really in the last month and a half, Bitcoin's flowing out of exchanges. The hash rate has recovered very nicely. We're up almost 40% from the lows in early July. So, to me, that says that miners are coming back online from the China displacement, really removes uncertainty from the network. And one thing that's been especially positive to see are that active addresses are finally ticking up again. The 7-day Bitcoin active addresses are up roughly 10% in recent weeks. So I think all of a sudden, people are getting interested again in Bitcoin and crypto especially.
So we've heard a lot about Bitcoin recently, and also about Ether with the hard fork. What are some other coins that are kind of doing interesting things? I mean, there's a few that sort of stand out, like Solana or Cardano. Anything that's on your radar that people should be paying attention to?
Yeah, I think both of those are really the ones that everyone's looking at right now. Cardano is especially exciting. Kind of, they hinted that smart contracts could be coming in mid-September. And people in crypto, they especially love to see, these projects that have a lot of promise. So it remains to be seen how successful kind of the smart contracts on Cardano will go, what sort of applications it will attract. But investors love to see, this potential growth story. So I think that's kind of explaining the price movements there. With Solana, I think people are waking up that, there's, more blockchains than Ethereum out there. And some of these, they can be faster, and cheaper as well. So I think investors are right now understanding that there's broader, there's just a lot of room to grow between other blockchains, and especially how right now Ethereum is still kind of in this awkward position where We had EIP 1559. We're still below, we're still before the 2.0 kind of merging. Optimism and Arbitrum, the layer 2 scaling solutions, are still really taking their time with adoption. So I think investors are just starting to look at more and more coins.
Do you think that a lot of this movement off the exchanges is in the OTC market, where we can't keep track of what's happening on what's actually happening in terms of buying and selling of Bitcoin and other major currencies? Do you think that we're slowly but surely moving away from centralized exchanges in general?
Yeah, I think so. I mean, it's difficult to kind of quantify how much of the outflows could be attributed to OTC. One thing I have noticed is that, sort of the trackers behind it, something like Whale Alert, I've noticed that there hasn't been as much chatter about large outflows specifically, because I remember, during Q1 and partially in Q2 this year, that whenever there'd be a huge outflow of Bitcoins, potentially into hundreds of millions, everyone would be, pointing it out. So I haven't really seen that recently. So for me, it kind of points that it's more individual investors doing that.
Do you think some of that outflow, as far as, as you were saying on Whale Alert, some of that Bitcoin outflow at least might be some concern over what's going on with Binance?
Yeah, I mean, possibly. I think, investors are always kind of concerned, about potential regulatory headwinds. And so sometimes, it could be in their best interest to kind of move their coins to other exchanges or to self-custody them. So I think that's definitely part of it.
All right. Martin, we'll leave it there, but thank you for weighing in for your analysis. We'll be sure to be keeping track of your latest research reports. That was Crosstower research analyst Martin GASPAR. Coming up, we'll check in with our CoinDesk Global Policy and Regulation Managing Editor, Nick Day.
CoinDesk Indexes, the market standard for crypto assets since 2014. The CoinDesk DeFi Index is our latest product and provides insight and exposure into decentralized finance. Our indexes are key for investors looking to access and understand crypto markets.
The CoinDesk DeFi Index is the best tool for a diversified approach to this compelling new category of digital assets.
The CoinDesk DeFi Index, measuring the investable DeFi market.
Welcome back. Let's say hi to our CoinDesk Global Policy and Regulation Managing Editor, Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello there, Nick. So Galaxy Digital announcing that they've just filed for a U.S. Bitcoin futures ETF. That's a wise move, considering SEC Chairman Gary Gensler has signaled that he prefers ETFs based on Bitcoin futures, right?
Yeah, so this is all kind of based around a speech that SEC Chair Gensler gave a couple weeks ago at the Aspen Security Forum, basically saying that he is a lot more interested in ETF applications based on futures and filed under the 40 Act, or I forget the exact name, but the an investment act regarding regulating securities issued in 1940 versus the Securities Investment Act of 1933, which is what most ETF applications have been based on, at least up until a couple weeks ago. Galaxy is not the only company to file a 40 Act filing. There's been quite a few, in the last week or so, especially. But it is, the latest signal that these companies see, there's still being a very real chance that an ETF will be approved in the near future. And, they see Gensler's recent comments as an endorsement of that idea.
So what does this mean for the turf war between the CFTC and the SEC? Do you think that now that it's going to be based on futures, do you think that it gives the CFTC a little more power in this situation, or is it actually going to benefit the SEC?
I think it's the SEC kind of endorsing the CFTC's view that Bitcoin's a commodity, but more importantly, that the Bitcoin futures market is regulated to some degree. Gensler isn't making this comment if he thinks that Bitcoin futures are as subject to manipulation as he's said the spot market is. The CFTC's overseen regulated Bitcoin futures in the U.S. since the end of 2017, and that seems to be giving, or that might be giving, some small level of comfort to the SEC that can, that sees this market as, being perhaps safer for investors.
All right, interesting developments. We'll see if the U.S. Bitcoin ETF finally gets approved this year. Nick, thanks for the update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Time now to check in with crypto Twitter with our tweet of the day. And this one from Tom Robinson, Chief Scientist at Elliptic, tweeting the epic 8-part Q&A of the Poly Network hacker, wherein the white hat attacker explains how and why he pulled off the greatest hack in DeFi history, stealing over $600 million from Poly Network, and saying that he will return it, but he has yet to offer the multi-sig key. He also goes into some German philosophy in his latest movie recommendation, Wrath of Man. I had a lot of time to read up on that last night. That's it for our first mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.